No one has any clue what the fuck is going on. The plane is flying without a pilot. We're going to be discussing the latest in the crypto markets, the Fed speak, what's happening with the housing market and jobs data, and much more today on Money Never Sleeps. Welcome back, everybody. GM Randy, good to see you as always. As we get started, you know the drill. Like, subscribe. Nothing we say is financial advice. Please do your own research, all of that good stuff. Kevin, we see the TradFi markets going down for a fifth straight day when it comes to the S&P and the Dow. Meanwhile, crypto is having a green day. I'm not too sure about all that. We see treasuries in the red today. We're hearing from Fed speakers, from Fed presidents, that maybe we got to raise rates again. No one has any clue what they are doing at this point. How are you feeling on this lovely Thursday?
It is, well, happy Thursday. It is so it's funny because we're below the 50 moving average on a lot of these indexes. Some of these stocks are just showing no signs of life whatsoever. Tesla. I forgot to cough first. Tesla. And then I did that right, I think. But yeah, it's such a boring period in this market. And we got OPEX tomorrow. You'd think there would have been a little bit more liveliness. We were up earlier in the day, then they sell off. Every time you give them a rally, they'll sell it off. We're not seeing any of these corporations come in and buy any stock because they can't buy it back until I believe May 1st or something like that. So this like blackout period is just like so absolutely boring. So looking at this, we're just looking at the important stuff across the board that is just showing us that we are heading in a direction that most people probably would like us not to go into, but there's just no stopping it at this point. But just looking at equities and crypto, it's like, come on, just tank already. Just do us all a favor and give us something to work with. Be more exciting.
All right, let's run through some of the data that came out. We had initial jobless claims still at 212,000, same number as last week, which is pretty weird. I owe someone my left nut because I was wrong about the existing home sales data. It came in at an annualized number of 4.19 million, which I don't know about all that. It's still pretty high. We'll see next week some new home sales data. We had New York Fed President John Williams stating it's not his baseline expectation, but it's possible, if warranted, that they could raise rates again, which the market did not respond favorably to Mr. Williams saying that right before they opened. He stated that like right when the markets opened, and it's been read ever since on the equities side. Once again, like the Fed has no clue what to do at this point. Like they think they got to keep rates up, but is it even working? Maybe they have to hike again. Maybe they're going to have to cut. Who the hell knows? You could literally just put those three options on a dartboard and just blindfold and throw, and you'd be doing the exact same thing the Fed is doing right now.
There is no hope whatsoever. I think everyone is. I mean, there's even people saying that like we're in a no landing scenario, or there's no soft landing happening anymore. You see how quickly the narrative shifted in since the beginning of April, right? Even towards the later end of March. As soon as those companies couldn't buy back anything, then the sentiment just absolutely shifted. We're also just getting bad news left and right, right? This month it's quietly so far over 73,000 jobs, layoffs that have been announced. We got a lot more yesterday. Toshiba, 5,000 jobs. We're getting more each and every day. I think Google laid off 1,000 people last night, and they also fired all those people that were protesting in their HQ. So I mean, jobs are expendable at this point, and we can see the BLS data or any of this other stuff too. You take it for what it is. I think the ultimate what do you call it, gauge of how the economy, the labor market's going to be is based off how these companies are just kind of operating in this time period. You're seeing the layoffs happen, Probably means people aren't buying as much. Probably means the economy is slowing down a bit. They got to make sure that their margins are up. They got to make sure they make profit. Otherwise, these jobs are just, losing them money if there's no products that they can actually sell. So I think it's all very misleading. But I don't think you should lose your left nut over the housing data, and I don't think anyone should lose their right nut over this jobs data, to be honest with you.
All right, let's kind of take a look through the markets. We're seeing a little bit of a bounce as we started the show today. I guess, the markets are comforted by our bearishness. The dollar is up on the day. The Dow has gone just north of break even. Meanwhile, the NASDAQ down about 0.5%. On the, on the stock side, Nvidia up on the day. Apple, a slight loser. Same can be said with Amazon. Meanwhile, Tesla has broken, they're hanging out just over 150 a share. Huge move down from where they were as recently as the third quarter of last year, about a 40% drop. So, not ideal, but is going to start to offer a good entry point when it comes to Tesla. Coinbase is up on the day, as you'd expect when every cryptocurrency is green. Let's talk about crypto for a second. I know you got the Tesla chart pulled up. We'll go into that. Let's talk for a second, though, on the crypto side about what is going on with Binance and how they have they've moved their SAFU funds away from Tether and over to USDC.
Yep. So we talked about this a few weeks ago. I think maybe like 2 weeks ago. Maybe it was last week. I don't remember. All these days, every day is exactly the same.
It's Groundhog Day right now. Like
Yeah,
every day, that same song wakes up. I smash the alarm clock, and we're just going through the same cycle over and over again with these markets.
Yep, 9-inch nails every day is exactly the same, and it's really where we are right now. This $1 billion emergency SAFU fund now makes up 3% of USDC supply. They offloaded all their Bitcoin, their Tether, and I believe Ethereum. Do they have anything else? Oh, no, my bad. There it is. Bitcoin, Tether, TrueUSD, and BNB. So we know that BNB is kind of in a troublesome place right now because there is an SEC lawsuit against Binance. Obviously, it's over whether or not BNB is a security or not. I think that was kind of the question that Gary Gensler had, along with the rest of the SEC. The other thing is too, we know that Janet Yellen last week, or like I said, when I talked about the banks that were breaking the sanctions laws with Russia, a lot of them were Chinese banks that were dealing with them. Can we not say that iFinex, which is a Chinese company that owns Tether, that operates Tether, were they by any chance committing any of those sanctions violations? We don't necessarily know yet, but is there maybe some fear that there could have been some type of commingling or intermingling of funds along with those banks? You could absolutely say that, right? And I said that there was a good chance that we could see some of these sanctions come down on some of these stablecoin people. TrueUSD, which we know is Justin Sun's, and Tether, which we said is iFinex, even though it's operated, or I think the CEO is still Paulo, or the guy who defends every Tether print for his life. This is important because it shows you that the Binance, who we know is completely a fraudulent company, has stepped away from that stance of holding that much money in Tether, TrueUSD, and BNB. That's really kind of a funny move to see. Maybe they know something that's going to be coming down the pipeline and they're getting ahead of it. Because again, once people start running for the exits in crypto, that shit flies like crazy. So being in USDC, pretty interesting. Also, the fact that it's 3% of the USDC supply tells me that we're also probably going to see stablecoin dominance continue to rise from here on out. So this is just kind of an argument for stablecoin dominance. We don't know the implications of really what's happening. We're just kind of speculating at this point. But I don't think it's a good look if Binance, who has done a great job of pumping the markets at times with some of the FDUSD and TUSD in the past, if they're offloading some of that and going into stables to maybe save some face. It could also be that they're just trying to pay some bills because we do know that they owe pretty good amount of money to the DOJ, right? So it could be a multitude of issues, things, but it doesn't bid well for, I think price discovery long term, in my opinion.
All right, let's go. I'm happy we touched on that. Sorry to kind of zing you around here. Let's go back to that Tesla chart. Now that we have hit, we're right around this 150, 151 is where we are sitting currently. Big gap down to start the day. Once again, second time this week we've seen a gap down on the open. What what are you seeing in the charts? Nothing has really come out that should make anyone confident in Tesla in the near term. We're seeing all this like humanoid robot stuff. that's fun. No one fucking learned anything from Terminator, but let's dive into the chart here and see what's going on.
Yeah. Again, I think we're going to be getting to a point where Tesla is going to be a bit of a more of a lucrative equity to be picking up on the cheap. I just don't think we're there yet. Is there a chance that it could bounce? Absolutely, right? There's always a chance that this market could squeeze people, especially if it's very lopsided, if a lot of shorts start coming in. But the interesting thing is this was, one of the top 7 that was kind of helping the Nasdaq up. We know that even the S&P at this point too, right? Those top 7 stocks were holding up those indices, and this one's showing the most weakness out of them all. I think this one will probably also find the bottom faster, sooner before the rest. We got this huge level of support. Well, we're at a level of support here in this B wave that's from this previous ABC corrective pattern in our major B wave. So this would have been around it's literally right here, 151. So we're finding support on that right now on the daily and on the weekly. Let's see how that plays out. We could close right around here by tomorrow. We could get a bit of a rally, but I still think that we're going to have to come down and test right around here at 104. And the reason I say that is because we didn't put in a higher B wave. We actually put in a lower one for the origin. So it tells me that we're probably going to put in a lower C wave than the A wave, just using L wave theory. So if that doesn't hold, then we're probably going to be coming down to the next level of major support. That's right here. This is like right before the COVID crash, and then it rebounded. So it's a huge level of support at $65. But this 104 and here in this range here is probably where we could potentially find a bit of a bottom. This is problematic too when we look even in Tesla's price history in the past. It's got a major gap right here that should likely be filled at some point because it never back tested it. And also, if the price gets here and there's a lot more sellers than there are buyers, there's nothing that's going to hold it up. You're literally just hovering over nothing at this point until you get to around $65 or so. So I think that we could see short term maybe some trading in Tesla, but I'm not confident in the price action. Putting in a new high or even going significantly to the upside. I do think that we will be testing this 104, 105 range. And if that doesn't hold, and then we're coming down a lot lower. But again, that could be, say something happens, black swan or something like that, limit down one morning. I absolutely touch that. We could, rally off of that and then eventually come down and test this down here. So this is where I think we'll probably end up at the ends. The only thing is this is the stock that is just perhaps reacting the fastest to bad news that other stocks in that same top 7 aren't. So eventually, I think all of them are going to see a chart kind of similar to this, if not even worse. But Tesla is kind of the one that's leading the way down, and eventually that's going to cause some of the other ones to follow, and that's going to absolutely hurt the Nasdaq. So just to go to the Nasdaq real quick, I still think this thing is so overvalued. This is an absolute mania that this Nasdaq has been on. My interest, kind of what I'm interested in seeing is a bit of this. Let's see if I can get this right. This kind of trend line right here. I'd like to see if this is the case in the worst case scenarios. We do have a bit of a pullback down. Trying to see if somewhere, that's even far. Maybe I have this wrong. Maybe it's something like this. There's a support level right around, I think it was like 9,000 or so, like 10,000, 9,000 for the Nasdaq, which would put us roughly, let's say from the top to about 10,500. Let's call it even there. That would put us down about 42%. And that's kind of being generous considering we do know that how these equities are weighted. If we look at back just at the dot-com bubble real quick, from the height to the bottom, we were roughly, it's an 83% move. So I would say more conservatively that 42% seems like it's definitely plausible. Possible, sure. Going further down than that, you would absolutely be in probably close to depression at that point. But it's something we have to watch because I do think seeing Tesla's weakness, eventually the weakness is probably going to hit a lot of those other tech stocks. That's probably going to cause the Nasdaq to plummet significantly. And we know that tech is one of the industries that they hire tons of people, but they also lay off a ton of people when they get the chance, right? When the money and things are good, things are really good. When they're not good, we're talking, what's the one company that was really bad that dropped like Enron? I know it's not a tech company, but we're talking like that type of like chaos and panic that these tech companies go through. They just lay people off as fast as they can. Look at Meta back in 2022. They were laying people off and weren't even at the bottom of the bear market. So it's going to be interesting how this plays out. But Tesla is definitely leading the pack, I think, in this drawdown that we will see in the Nasdaq eventually.
All right. Anything going on in the bond market that interests you? We're seeing valuations kind of all over the place. More selling today. as rates begin to move back up. The 2-year still hanging out just under 5%. Kind of, Goldman is going to be selling more bonds. We see concerns around, it's just, I don't know, man. I'm so lost, right? I feel pretty lost right now in a lot of this because we have no solid direction coming from the top.
Absolutely. And the bond market it's really hard with the bond market right now too, because you're getting one thing from the Fed, right? You're being told that rates are going to probably be higher for longer. A lot of people are actually capitulating to the bond market and thinking that, oh no, I don't want to be holding any of this shit. Let's sell it off. We're seeing a lot of these fund managers offloading these bonds. I don't know, man. I don't see the reasoning behind that, especially with the
Part
fact
of me
that
is part of me is like, are they selling because they want cash on hand because they're expecting an equities crash and they have a better entry point? And that's where we're playing this game of chess against people who have so much money, and I'm just small potatoes over here trying to make the most of the capital I have. It's a really tough time to remain patient because we've been in this point for a while of I've been nibbling at the pie here and there, but I still feel strongly we're going to see a big crypto drawdown. I have enough in equities right now, but man, what are the separating the signal from noise is really tough at this point.
Oh yeah, absolutely. And the thing is, the noise has been dominant from the top. I wouldn't say the top. I'd say from like October of last year to now, the noise has been like everyone's just believing in the noise, right? They believe what everyone's saying on the news. They believe everything like that. Meanwhile, the debt markets, treasuries, all these things that have been signaling, hey, people need to be cautious here. They're kind of saying something completely different. But then again, you're being reassured wherever you go. When it comes to this, I think that the flight to safety is eventually right around the corner. I really do believe that. And I think that the dollar, and we're seeing gold as well, which I know gold will sell off when equities crash. But the fact that we're seeing these yields continue to go up and we're seeing all these other countries that are in a really bad place and their currency keeps getting devalued at the same time they're dealing with problems like inflation, or they're dealing with problems like deflation. I'm not going to say who, but we're in a very kind of problematic thing where the dollar continues to get stronger against those currencies, and that's making their own citizens, less wealthy by just default of how global trade, oil markets, and just how the dollar is the global reserve currency. But with Japan, I'm going to go back to Japan because it's kind of my base case for everything here. We're seeing that the yen, and this is really funny here. I'm going to the 5-minute chart for the yen, which is going to be like chaos. But last night we had a really good yen dump. You can see that we were right around here, around 154.79. And then overnight, sell off, right? So, I mean, people were just buying up the yen. The yen was getting stronger, and it was coming down to this level, and it got to about 153.96. And then right after that, started picking right back and going right back up. So it seems like whatever the Bank of Japan, whatever Japan does, any type of intervention that they're taking, it's not working. And it's not working in the short term. And if it does work in the short term, obviously it would last maybe a few days or so, but it's not even lasting minutes at this point. Something is definitely broken to the point where we're going to continue to see problems like this. And I think that they're going to have to take drastic measures. And that drastic measure take is to sell off US debt. If that's the case, the US equity market's probably going to sell off in order to save the treasury market. And I continue to say that because that is the true black swan, I believe, that will cause a lot of pain in the equity markets. Probably will be labeled as something else, but this is the thing that we need to continue to watch because Japan is are they the second or the third? I think they're the third largest economy in the world. And if they're having currency problems it's just going to all lead to exposure and contagion. One thing that we should talk about when it comes to exposure and contagion is SoftBank, which we know if we have not been very proud of them in the past on this channel, because I do think that they've been doing some things that are very questionable. Again, I'm just going to leave it as questionable, but because of the yen problem, look what's happening to them and their holdings in ARM. They're absolutely unloading this shit. Is this a surprise by any means? No, not at all. We know that SoftBank's probably just saying, you know what, we got that stock unlock. Let's take some fucking profits, man. It's kind of been kind of a pump and dump when you look at ARM. I don't believe that this IPO is really worth this much. It's coming down. It's probably going to fill this gap that it got back in February between 94 and $76. And what happens if things in Japan get worse and the yen continues to get out of control? Well, they're going to have to, make sure that they have enough cash on hand. This thing is leading to contagion all across. And then think about all the companies that are holding arm stock, maybe are even they're over leveraged and they're holding this shit, right? Eventually it's going to come down and it's just going to bite everyone in the ass because contagion in this market is inevitable. So one little thing that's happened over in Japan, definitely going to bleed over here. It's going to bleed over to every single aspect of the world, and it's even going to bleed into consumers and labor markets. So when you look at the bond market, I know it's kind of a long-winded answer, bond market, currencies, and all this stuff, it's fucked. It's just a matter of waiting to see what breaks and when it does and how bad it breaks. But eventually, you can only go so long with bad monetary policy before everything does kind of give through, and everyone's just kind of panicking and not necessarily sure what to do. So that's why we're trying to provide as much as possible, kind of like a heads up on what could happen if this does play out, and why we're doing less, because I think that honestly might be the best way to handle some of this craziness that will come. It's just we don't know when. That's the scary part. And we're closer than ever, I think, now as we get with rates remaining extremely high. So could it happen next week? Sure. Could there be an invasion next week? Sure. We don't know when it's going to unfold. That's the bad thing. It'd probably be when we're sleeping in the Asian markets, right? Who knows?
All right, let's wrap it up by looking through crypto. We're seeing Bitcoin back over 63K today. ETH over 3,000. Solana's trading just around 140. Bitcoin dominance up slightly on the day, and we're seeing money come out of stables into crypto. Where on the, looking at the Bitcoin chart, we got our golden arches up top. Are we in a parallel? What kind of channel, triangle, wedge, wave pattern are we in right now?
It's really shitty here because this is kind of distribution. Where I would like to see us in the short term go, ABC corrective pattern, and probably see it better on the 4 hourly. So I would like to see us correct here, pull back down, and then maybe make one more push to the upside. Maybe get a double top around 66.9. From there, I would like to see another 5-wave move down. And that would be reasonable, right? When we're looking at this in terms of wave counts and just kind of all this craziness. Obviously, bigger structures we'd have to see. But if we're looking at this being bullish going into the halving, which is in 200 blocks last time I checked, there's a good chance that we could still rally up to this high at 74, 75K. I'm open to that, right? That could be a fast rally that could last a few days, could last a week or so. Who knows? I don't necessarily know in terms of timing, but I do know that once we get the halving out of the way, it's like, okay, what else is there to push this market up? Is this just another opportunity to sell every rally like we're seeing in the equity market? It's something that we're going to have to pay attention to. Maybe even people that are just like, man, this Bitcoin shit sucks. I don't want to hold these ETFs anymore. Let me get out of this shit right now. And eventually I'll just put it back into like money markets or something. That could happen too. But key level is always going to be that 60K, because then you get the chance to test this bottom level of resistance down here. So let's say 59.9 or so, right? If you don't hold that, you start coming down lower. You lose 59 flat period, and you're in 58. I think that's when you start to panic and you're probably going down to that 52 level. So this is the key level of support to watch, that 59 to 60 range right within this little triangle here. And then if we're looking at this in terms of pump to the upside, 74, 75, right around that range is going to be pretty vital in my opinion. And again, all contingent on the Bitcoin halving, right? It depends on if we see stable coins minting tons of these stable coins to push the market up. But by itself, I don't necessarily know if we're going to see the strength in the markets to push that up. If we're not seeing it in equities, it's going to be, it would have to be kind of a stable coin effort, in my opinion, to push the price up any further from here. But at this point, does that matter? I don't know. I don't know if it benefits them at that point.
Yeah, I see the halving as a sell the news event.
I agree.
And I see it as a sell the news event that leads to a great buying opportunity. That's what I personally am betting on. Not selling any of my Bitcoin holdings. So I don't want to, incur that, get that tax liability. That's for damn sure. But let's look at a few others, and then we can call it a day. So you got total market cap pulled up as we speak, starting to move down below, what's that, the 50? It's under still.
Yeah. So it's still under the 50, and we're oversold on the daily. So I just wanted to pull these up real quick because I'm willing to say that the market has enough to push up to the 50 moving average to get rejected. I think that's more of a likely scenario. If that doesn't hold and we start pushing up above it, then this level, this triangle up here, this trend line, we're going to probably see if that gets rejected there. If it doesn't, then obviously everything I said today was wrong. But if it gets rejected there, then you're probably going to come back down. I expect it to be rejected either at the 50 or at this trend line up here. Now, say things are worse than we expect, and we got to, maybe this is just a capitulation event. We shoot down. Well, you're probably going to come down to down here or the 200 EMA, and that kind of goes the same for total 2 and total 3, except these are probably going to trade within each other, right? Total 2 probably is going to hold up a little bit stronger than total 3 just because of Ethereum, but I do think that of all of these, total 3 is going to be the first one to come and test this 200 down here at 544 billion. I still don't see strength for alts, and it's just because dominance is still 55.6. I think it's a good chance that if we do get a pump in Bitcoin, we're going to see Bitcoin pump. I don't necessarily know if you see alts pump with it, and that's probably just going to bring the dominance up pretty significantly. And then again, using the USDT chart, still bounce off of this. Usually it bounces off it and then it pushes up. So I think this weekend's going to be really interesting once the halving happens. I do agree it is going to be a bit of a sell the news event. Now, alts, watching those, it's going to be really interesting to see how that plays out. Because yeah, alts are oversold, right? On the daily, I completely agree. These things probably should rally, but will they rally nearly as much as Bitcoin this weekend? I don't necessarily know. I don't even know if Bitcoin's going to rally, but if it does, I don't know if these alts are going to have the strength to push up against it, especially these BTC pairs. I think those are the ones that are going to hurt the most. You might even see like ETH BTC bleed, Sol BTC, all those are going to be in really bad shape if Bitcoin pumps. But there's just no justification for a lot of this stuff, right? This is a really good move to the upside. We could get a small three-way move, but I mean, even look at Cardano. Cardano's below the 50 and the 200 now. It's XRP. XRP doesn't even have moving averages. Oh, they're there. About to get a death cross on the XRP. You're significantly below that, right? What else have we got here? Matic. Yeah, like all the alts are in very bearish scenarios right now. So you're below the 50 and the 200. Technically, what traders will tell you to do is to short when it's below that. I'm not going to tell you to do that because I never did that in my life, but that's usually a sign across the board that these things are in a bearish state of play. And if you find rejection when you do tests on some of those moving averages, if whether they find the price or the price finds them first, tells you that we're probably going to see further bearish continuation. So Bitcoin right now, probably the most bullish asset out of them all. But again, long-term macro, I think that's the one that's going to end up killing everything else underneath it. So I'm really excited to see how that plays out after the halving, because once that's over, we are pretty much in free territory for anything to happen.
All right. The halving. It all comes down to this. That is going to do it for today's show. We will not be here tomorrow or Monday. Kevin is traveling. He's got to stack those greenbacks so eventually he can buy the dip. But we'll be back on Tuesday, post-halving. After, we'll see how the markets close. Not a whole lot happening in the markets on Monday anyway, so, not too concerned there. But we'll be back on Tuesday, and we'll have plenty to talk about then. So thank you for watching today's show. If you have not yet, hit the good time to travel to Japan.
It is
100%. I'm supposed to be going into Japan December of 2025. I'm just like, God damn it, the timing could not have been worse. Like,
wait for 160.
Oh man. Oh
Just
boy.
convert.
Maybe I'll just buy a bunch of yen now and just like have it on hand for when I go over there and just be making it rain yen in Japan. Okay. We'll be back next week. If you haven't yet, like, subscribe, comment, all that good stuff. Have a great rest of your week, everybody. Stay safe out there, and we'll see you next time.
Take care, everyone.